perspective of technology, I think all of them have given it, right? And bear in mind, technology does not always mean coding, does not always mean, lengthy Python programs or, the AI solutions. It's basically, if you look into each of them, there is a core problem which is associated with a function or a domain. It could be a stock market, it could be the banking, it could be lending, whatever it is, there is a core domain of finance. And that's where the beauty of the fintech is. Now, because many a times, today, when I mentor, many of them ask, hey, my kids are at 9th and 10th standard, should I send them to IITs or, technology side? I think it's a combination of both, because you equally require the domain expertise as well. So with that as a background, I'll probably, a few generic questions to all the panelists, and probably again I'll start with you, Nitin. What do you think is the way in which the education system, with which what we started off, what all of us went through, and how you probably see those changing so that we can adapt to this sort of innovation in the future?
Yeah, no, I think, so one of the reasons I think we all need to be curious is because, then you tend to have a higher odds of coming across something that you love to do, right? As in, I think with me at least, especially, I was really, if Gaurav, has gone to Stanford and also he's done quite well educationally, but, I was really the last guy in this school, in my class every year from my 3rd standard. I don't know how the 1st and 2nd standard I managed to do okay. But I think what worked for me well was that I ended up finding stock markets. It's just something that I love to do. So when I look at my son, who's 7.5, 8 now, I think my objective with him is to get him to kind of experiment, discover as many things in life as possible. And I think maybe the education system also should do that, right? As in, it should kind of expose, like what the college is doing right now, as in, having people like us come and talk. It kind of, I don't think stuff like this was happening when I was in college. I've never been a part of a panel discussion ever. In the sense, I've never watched a panel discussion until I think I started the business. So yeah, I think the college, and I think it has to come from within, which is all of us should maybe look at everything around us with curiosity and try to explore. And if you come across a problem which is close to your heart, and then if you can go build some core competency around it, maybe then you should go attempt building it, right? The other thing I think which is happening right now is, over the last 4-5 years, the reason entrepreneurship is so cool right now is because there is a lot of wealth created out of it, right? If there was no wealth created, I don't know if entrepreneurship would have been celebrated as much, right? So all of these news of unicorns and whatever, right? As in, that's not going to sustain forever, right? As in, I think at the end of the day, entrepreneurship is, someone who was passionate about something, going out there and trying to solve that problem. And the education system, I think, should be kind of nudging the students to be able to do that. That's how I think it should evolve. And there's already a lot of changes happening, I think even on the government side in terms of the new education policy, etc. So we need to see how it goes.
Gaurav, you want to add your thoughts from the educational side?
Yeah, I think the one difference today from when I was studying in Christ at least is when we were studying, a lot of it was fundamental, theoretical, which was very important, right? Which I'm sure is still happening today. But like Nitin said, the practical applications of those, diminish over time if you're not actually understanding how to use this in day-to-day stuff. So obviously the panel discussions and exposure to industry is one piece of it. But also just, figuring out how you can actually inculcate some of day-to-day practicals, whether that's internships at companies, during college, things like that, make it a lot more interesting.
Right from the primary education, I believe, and in the right way the present government is doing, involving all the stakeholders, whether it is ITI or whether it is engineering colleges or anything. But the technology also has to be updated on I can say even on a daily basis. Unless until you catch up with the whole world. And we are lucky that whatever is available in US or in other parts of the world is easily available at the same time on real time in India also. But there is a requirement from the government side also to support the required. NEP is one new education policy 2020 is one step towards that, where vocational training is also equally given importance. But at the same time, we should encourage the students also, wherever they are showing. Suppose some students are not showing in core science or some other subject, or where they are really excellent or excel in technology related. The right kind of atmosphere has to be created at all the schools and colleges by setting up computer labs or whatever latest technology or the tabs that needs to be given. Of course, so many governments are providing. The coding, when I was just going through the coding part, both Nitin and Gaurav touched upon that. That is most important, because nowadays kids are learning. If I go through the Baiju or some ads, definitely coding is most important and needed for the future technology explosion. Anyway, AI has already come, blockchain technology has already come. ChatGPT is shaking the whole world, getting into the corporate wars, and so many other things are happening. Yes, it is the responsibility of all the stakeholders to bring in the right atmosphere of technology, which should be loved by everyone, so that it is beneficial for the whole mankind. Thank you.
Interesting, thank you. So when sir was speaking about, he spoke about the change, right? From the old to the new, and that brings me to an interesting thought process. I'm sure as everybody wants to do something new, there is always an element of resistance. There is an element of competition, there is an element of why should I change, right? Let's probably hear from these entrepreneurs, and this time probably Gaurav, right? When you brought in the Fintech revolution in the buy now pay later space or any of those, what was the biggest challenge which you had, and how did people slowly start accepting it?
You know, when around 2014-15, when we actually wanted to start lending and digital lending, we had to go to a lot of venture capitalists to ask for money, because if I have to lend money, I need money. And the biggest problem we had is everyone told us that, you know, two people who don't have any experience in banking or lending, having spent time in US, you all will never be able to do lending, right? So you all forget about it, go do something else. And it took us more than a year, I think, to convince one person to take a bet that this was actually an interesting space. And this was way before Aadhaar and things like that, right? So people are not really realizing the power of fintech and digital credit in that sense. So I think the biggest problem we had, and I think that's obviously changed in the last 4-5 years, is how do you raise money, and would anyone give us money and trust us to build a business that was typically a very, very traditional branch and brick and mortar driven business. And people would then question us that in a country like India, do you have what it takes to be able to give a loan and actually get the money back, right? That was the hard point, being able to prove to people that we know how to do it. And we made a lot of mistakes along the way. But the first hardest part was being able to prove to someone that this business could be digitized, and this business could be run through technology, and this business we could actually know how to collect back the money that we could give.
And Nitin, you want to give a perspective, because you sort of changed the way brokers started looking into business.
Yeah, no, I think, you know, there is a very thin line between being foolish and being passionate. You know, it kind of works out. You celebrate saying passionate, but you know, if it doesn't, you call, you know, foolish, right? So I think right from when I started trading the markets, I was told to go get a real job. You know, so you know, when I started Zerodha, even before starting Zerodha, you know, we spoke to a bunch of people in the industry, and they were like, you know, dude, you can't just go build a broking firm like that. You have to be in Bombay, you have to be this wealthy, and you have to have this background. The regulators will eat you, the government will eat you, and you know, I mean, so yeah. So I think the first conviction was just to, you know, first resistance was really the environment around you, right, telling you not to do this. So yeah, so today I think, you know, when I look back in time, I think at that point of time I was very foolish to think that we could go build a broking firm, you know. So I mean, it turned out okay, but then I think in terms of business, like right from day one, right? I think I was in the industry for a while before we started the business, so I knew what a competition does. I knew what traditional brokers does, and I always knew that in any playing business is like playing a sport, right? As in, you need to have some kind of an edge. I mean, like I also love playing basketball, so like so you can either be tall and big, or you can be nimble. Or, you need to find your moat, right, and kind of build on your strength. So right from day one of the business, in my head, I thought, for our business, it's going to be how nimble you can operate, which means how quickly you can keep changing and adapting as a business, right? And in a regulated business, you also need to have what is called as a regulatory foresight. You need to have a sense of how regulations will change over the next 4, 5, 10 years, and kind of build your business for the changing regulation, not for something which is already there. Right? Because every time, like if you were to ask both Gaurav and me, I think the biggest risk for us is regulatory risk. Tomorrow morning you can get up and say, dude, this is not possible, and you're probably down 50% revenue, right? So it's just to be able to anticipate that, saying, what could be that regulation that you wake up to tomorrow morning, and can you be ready as a business for that regulation? That internally, there's always a resistance for that. Like, when you're trying to forecast something which is not happening, which is not today, but you're saying, what, dude, this can happen over the next few years. So we need to change internally. Because I think the biggest resistance for anyone building a business will really come from within the team. Right, and more than outside, right? Because it's very hard for everyone to think alike. So like in the office, me and Kailash, Kailash runs a tech like this, and I run the business side like this. We call it benevolent dictatorships. So and because it's very hard to keep everyone in consensus and be constantly changing. So I think yeah, for people wanting to start, I think the idea has to be to constantly keep changing and fighting the resistance of not wanting to change, and that's really what will determine if you can do well as a businessman or not.
Very interesting. Thank you for giving your views on that. And since you had slightly constrained on time, I'll probably open the floor for a few questions from the audience to you, and then probably to the other panel members, and I'll probably supplement with a few other questions. Any questions from the audience to Mr. Kamath? We'll have to make it quick because he has. So I can see somebody raising his hand here. Okay. While they get the logistics right, maybe one quick question. Can you tell how one of those regulatory impact had on your business, both on the positive and the negative side? And we always see that, all of a sudden the government says, hey, more regulations, more cybersecurity guidelines, more, do not do this line of a business. Maybe a couple of interesting good and bad cases which you probably came across.
So the thing is, so what has happened in our industry, right, in the broking industry, we've had a few rotten apples, over the last 10, 15 years. The last one was quite a big one, with Carvey, which in 2017, 18 they went bankrupt. I mean, they cheated and whatever. So the regulatory fixes post that has been quite a bit, and so like one of those like a simple one was, for example, how much leverage you can take as a business. Like in an NBFC business, it's defined, right? As in you can be 5x, 6x of your capital. But there was no defined leverage for a broking firm. You could potentially leverage as much as you want. So which means you as a customer come to me, you have 1,000 rupees in the account, I can allow you to buy for 1 lakh rupees worth of stocks or 1 crore worth of stocks. There was no rule which said you can only allow this much worth. So this is something, right from day one of Zerodha, I knew that this will be a problem some point of time. So at the cost of losing business, we said we're going to define a maximum leverage a customer can do. And we've lost a lot of our business because of that. So when in 2017 this rule came in which said, there's a maximum leverage you can offer as a broker, we were kind of ready for that regulation. So it didn't impact the business at all. So we actually, I think, gained on the competition significantly in those few months when the regulatory change happened. So, even in terms of tech, like, even today, for example, we were just talking about in the office, which is when you open an account with a stockbroker, if you open an account using Aadhaar, in-person verification is not required. What is in-person verification? It's ensuring the customer opening the account is the same person whose account is being opened. right? You can verify the document using Aadhaar, but you cannot verify if the person is the same person using Aadhaar, because if I have Gaurav's mobile and his Aadhaar number, I could open an account saying I'm Gaurav, right? So we are the only broker who's mandated that we will not open an account unless we do an in-person verification, because there is a chance that someone can be creating a fraud. We lose a lot of business because of this. But today the regulatory allows for such something like this. But I know that one of these days, we'll wake up and regulation will change, right? So I mean, things like that. I mean, I think it's important in a regulated space to have like the regulatory foresight, like I said earlier.
I'll probably take the view of other panelists, but I'll quickly take questions from audience. Yes, sir, please.
Hello. First of all, thank you, sir, for the wonderful session. So my question is that AI is everywhere and it's here to stay. So what do you think, how does the integration of AI would happen in the fintech domain, and what innovations we can see in the future?
See, AI right now is really a buzzword according to me. So we use no AI at Zerodha. We use no blockchain at Zerodha. Right? I mean, we don't even find a use case of using AI and blockchain at Zerodha. Right? I mean, of course, ChatGPT is wonderful. But is there a real life use case of ChatGPT right now? It's still not there, in a business sense. So I think while there's a lot of fear that AI is going to just take over the world, I think it's too early to say it. I mean, these words get used quite a bit. Generally, like everyone likes to hear to something that creates panic. Panic increases your cortisol levels, and an increased cortisol level is also kind of a high you get. So people like to spread panic. So I think we are still some time away from AI. But if I were to think about where AI could be useful in our business, it is maybe in customer support. I mean, the only place where we use AI today actually is in-person verification. So when you come on Zerodha and you're opening an account, we have this video camera opens, and we ask you to talk or whatever. At that time, we are matching who the person who's talking to what is in the ID proof. And Amazon has this AI program called recognition, using which you can match two faces and say if it's the same person or not. And it works phenomenally well. Like for example, if I came with long hair and beard, and my photo has me with a bald hair, it's almost impossible for a human to even spot it. So the AI does a phenomenal job in matching and saying is it the same person or not. I think in customer support is where I think some of what is happening in artificial intelligence will help. But you don't really need artificial intelligence for it. I mean, you just need like a good database of support questions, and that also solve the problem of sorts. So yeah, so short answer to your question, I think AI is a lot of hype right now. We need to really see real life use cases of this.
So you still can't skip your assignments, you still have to complete them. Not expecting an AI to do it. So yeah, somebody this side, I saw somebody raising hand. Can we have one of the volunteers?
Okay,
yeah, please. Next is here. Please go ahead.
Hi, I'm Saket. Actually, I am a...
No, we can hear you.
And trader. The thing is, I had the question regarding the startups which are being celebrated right now. So I do believe that bootstrapping or a startup generating a good cash flow, for a startup it's very important. But nowadays you see that most of the startups are going behind valuations, right? And these startups are being celebrated. So my real question is, most of the startups do fail without even making a single rupee of profit in their journey. So do you think what people are celebrating right now is the right way? Because they are celebrating just the valuations, not really the cash flow.
Yeah, no, I think the question for you to ask is, why is it become easy to get those valuations, right? As in, I think Gaurav will also agree, right? I mean, forget the last 1-2 years, but between 2018 to 2021, there was a lot of capital available in the world, So the interest rates in the US was 0%, right? So a lot of money from the US was chasing, businesses everywhere. And a lot of that money came to India, right? So when the money came to India, so there was a lot of supply of capital, but there were only a few startups who are doing well, right? And so a lot of startups ended up raising a lot of money. Now, is it good for the when I think about is it good or bad for the country? In a way, it's good because all of that venture capital has helped create the next generation of talent. All these people who are coming from Capital Float, or people who are coming from Flipkart or Amazon, people who come out of these places and are building startup, right? And kind of entrepreneurship is not ending in that one business where the funding is happening. So a lot of this funding that's happened into the Indian startup ecosystem is creating a lot more entrepreneurs. So in a way, all the capital that came with whatever valuation be it has really helped create the ecosystem in this country, right? So in a way, that's a plus. What is a minus here, like you rightly said, is when businesses are built only on valuation, you're always just one winter away from a lot of businesses not existing as well, right? So assuming the current winter lasts for 2-3 years, if a startup is not already making money and is not able to raise more money, it'll become harder to survive. So the resilience and sustainability of the startup ecosystem reduces. So I don't know if there's a right answer to your question. Should people be celebrated for building large businesses? I think they should be, because when you celebrate them is what will inspire others to go build businesses. But I don't think you should be celebrating only one type of business. I think the way we celebrate a unicorn in the newspaper, the same way we need to celebrate a startup which is making profits. Right? So you need to have all kind of businesses being celebrated. And unfortunately, over the last 2-3 years, the mainstream media has only picked up businesses that has raised valuations and etc., which has been celebrated. But I think that will correct. Over the last 1 year, we've been getting celebrated quite a bit, right? Because we are profitable. So it cycles through. It'll come and go. But you as an entrepreneur, you have to do what feels right for you. And I think Gaurav will agree that money brings obligation. Just because someone is giving you money doesn't mean that you can just take the money and go do anything you want, right? You have to go still build the business. And just raising money without really the need of the money for the business does more harm than good for the business. And those are my thoughts.
Thank you so much.
Thank you so much. And that's perhaps one of the reasons where you decided to be bootstrapped and
No, see, the thing is, it's like every business, right, can be built in different ways. And we were lucky to be at the right place, right time, to have been able to build this without going to have to raise capital. It's not possible to, I think if Zerodha has to be built again today, I don't think it is possible to be able to build this bootstrapped. So
fantastic. I think that's a very good insight. Thank you so much. Can we have a couple of more questions here? There's a gentleman here.
Hello, so actually,
Okay.
We know that the market timings are going to get increased to, FNO is going to get traded till 11:55. So I want to know what it brings to Zerodha in the first place, and then I have a follow-up question.
Sorry, I couldn't get your question.
Be a little louder if you don't mind. That's better.
Yeah, so my basic question is that the market timings are going to get increased to 11:55
Okay. So you're asking about stock market timings.
Yeah. So how is it going to impact Zerodha overall?
See, the thing is, if the markets are open longer, the impact is only positive, right? So there is, if a restaurant can be open between 9 to 11 a.m., but now we can open between 9 to 5 p.m., he's going to sell, if he's selling idlis, he'll sell more idlis. So there is no question about the impact. Impact is positive for the business, but the problem is what is the impact on people, right? And that I'm not sure. If the market is open continuously for 12, 13 hours a day, I think a lot of people's personal lives will get affected. And my concern's more around that and not really, what it'll do to the business.
Yes, sir. Actually, traders, they cannot hold their horses from 9:30 to 3:30, sending in 30, 40 orders. And when the market is going to be open for 12, 13 hours. So I guess the retailers would require more investor learning programs and educational camps by the other institution. Basically, from your institution, we have seen Varsity. So, is there some that kind of initiative being planned by Zerodha?
Yeah. So the thing is, as a business, we evolved, right? As in, when we started Zerodha, it was about helping active traders reduce costs. Then it became about education with Varsity. Then it became better platforms. the business has seen a lot of success, but the question we are asking at Zerodha right now is, do our customers do better with money because we exist, right? Because if we are not helping our customers do better with the money, I mean, what's the point of existing? That's kind of question we are asking. What we realize with education is, what you kind of publish, only a few people consume, right? So the way we are thinking about education is like what Gara was mentioning, more like practical, which is, can we tell you before you make a mistake that you're making a mistake, right? In a sense, so if you're on a trading platform and say you have, a portfolio of say ₹1,00,000, and all the ₹1,00,000 worth of stocks are in banking stocks, just giving an example, and you come on the platform and try to buy more banking stock. Before buying a banking stock, can I tell you that you're already too exposed to banking stock? Maybe you should not be buying more banking stock. Maybe you should diversify your portfolio, right? Or similarly, we call this initiative as nudge. We started this 2 years back. So when you come on a platform and you try to buy a penny stock, we kind of scare the shit out of the customer. We say, dude, there's no business. Why are you investing in stock, right? So our penny stock trading volumes have dropped significantly, right? So what we have realized is, those fraction of a second that we get with the customer while he's placing an order is where we can educate the customer as well, right? Because in today's world, there is so much clutter around us. There's so much noise, right? I'm sitting here, I'm thinking my email, what's happening at work, what is, my son. I mean, there's always so much noise that it's very hard to sit down and kind of learn something, remain focused on something. But on our app, what we've realized is, maybe it's the same with e-commerce as well, right? It's just when you want to buy something, for those momentary couple of seconds, you're not thinking about anything else, right? You added Reliance on your stock, on Kite, and you said buy Reliance 1 share. When you say confirm the order, at that point of time, you're thinking about nothing else but Reliance and Kite, right? Now the question we're asking is, in that fraction of a second, those 1 second, 2 second, whatever, can we educate you into the right trading behavior? See, at the end of the day, for all of you trading the markets here, there is no holy grail, as in the sense, there is no, there is nothing I can tell you after doing this for 20 years that will help you make money, right? But what I can tell you is, these are these 5 rules that you have to follow in life. If you can do this well, you can potentially do well in the markets, which is, don't get concentrated, don't put all your eggs in one basket. If you are taking risk, take with small amounts of money. If something is going against you, don't throw good money at bad money, right? Which is very natural tendency. You buy a stock at ₹100, it comes to ₹50, you want to buy more of it, right? Which is like the worst strategy in the market, right? And something called as a disposition bias, which is, you have one stock at ₹100 that you bought, another stock at say ₹100. Now the stock which goes up, you will sell it fast. The stock that goes down, you will hold it. You have to do exact opposite to that in the market to make money, which is you hold on to your winners and you exit your losers, not the other way around, right? So these are all those 4-5 rules. If you can follow well, you can do well in the markets. So these are something that we are saying, can we incorporate within the app and see if we can nudge the customer? It's just an experiment. It's a long answer to your question, but I'm very passionate about this. So this is on top of, on my list of things to do right now. I think traditional financial services firms, the employees of traditional financial services firms are very cold to their customers. In the sense, when I say cold, if a customer loses money, it doesn't impact you. It hurts me if my customer loses money, and everyone on our team, I want them to feel hurt if a customer loses money, right? And we don't sell anything in the business. Not a single person in our company has a sales target. So these are all a different way of running a business, which we realize, culturally, it's very hard to take someone who's already got experience to make him kind of, unlearn everything and relearn something. So we took the hard way out, which is to get people who have never worked in a financial service firm to join us. And one of the upsides of that has been for us is that because people have learned so much along with the business, our attrition rates are extremely low. On our tech team, we've had 2 people leave us in the last 6 years. On our overall team, from the core team, or the first 100, 200 people who joined us, maybe 5 or 6 people have left over the last 12, 13 years. So what the upside of I think hiring freshers and spending a lot of time to help them grow is that people are stick around for longer. Now the thing about people's skill set, it's like money; it compounds with time. Like if you are doing certain kind of a job, the first 1-2 years you will you'll spend only to get the context of the job. Your contribution to the business really starts only once you spend 2 or 3 years in the business. So if you can help retain, I think, your team, the contribution you get from them also increases over time. So a lot of people who spend a lot of time in the business are very, very, very valuable as well. So which is easier to do if you hire freshers and people with no experience and spend a lot of time around them.
Thank you so much.
Thank you. And I think I will probably have the last final question before you get to your schedule. What is your piece of advice considering the millennial crowd, considering that they are curious, they want to experiment, but at the same time some of them want faster results, right? So it's a very interesting sort of set of people we are dealing with. I'm sure when you are onboarding freshers, right, when you're speaking with them, they come up with, hey, let's do this, let's change the world, and day two they realize it's probably impractical, right? So what's your thoughts on that from a founder perspective, and probably few years down the lane, how do you think they should probably adapt?
See, the thing is, so we run, I'm very passionate about the foundation that we run, and every time I come across a scientist who's working in the climate space, my question to them is there a way to grow a forest fast? Right? I mean, why is there not enough science, enough money going behind, growing a forest fast? And a forest is like as an interconnected system. You can grow a tree very fast. You can plant a tree, you can put steroids into it and it'll grow fast. But a forest is an interconnected system, and you can't. I think it's really, really hard to grow a business fast as it's like a forest. There are so many interconnected systems in a business that you cannot expect for a business to be successful. Now, today we get celebrated as Zerodha, but I think Zerodha started in '98 when I first started trading the markets, right? So it's taken 25 years to get here, right? As in, it didn't happen in 1, 2, 3, 4 years, So I think the last 5 to 10 years of the entrepreneurship ecosystem, because of excess capital, it's kind of given an illusion that you can build a business fast. But I don't think it's real. Of course there will be outliers. There'll be a Facebook will come and in 4 years become large. But if you actually look at it, businesses to become sustainable, resilient, etc., it's a multi-decade kind of has to be a multi-decade plan. You can't just think that you'll build it very quickly. And as India gets competitive, it's only going to get harder, right? As more and more people are thinking about your idea, it'll become harder to grow a business. So I think if there was one advice, would be that if you're trying to build a business, try to do it around something that you love to do, then, because you have to slog it out, right? And slogging out becomes easier if you're doing something which you love to do. I think in life, to get lucky, you need to be at the right place, right time, and the chance of that happening is higher if you can survive longer. So if you do something that you love to do, then you'll survive longer. So if you survive longer, the odds of hitting lucky also increases, right? And the other thing is, I think, before you build a business, I think try to go build some core competencies around, whatever sector, industry, etc. I think the biggest reason for whatever little success we've had Zerodha is because of the 10, 12 years that went before Zerodha in the industry, which helped the business afterwards. So yeah, I think these 3, 4 things.
Fantastic. Can we have a round of applause for Mr. We go to the organizers in case, because he has he's crunched on time, and it's 3:15 as it was.
Thanks a lot. No, sorry, I'd agreed for something else as well, but thanks a lot for having me here. And I don't know when was the last time I was in a college with such a big audience, so thanks for inviting me.
Thank you, sir, for taking our time out of your busy schedule. It was an honor to have you. I now request Dr. Karthikeya Prakasam, sir, to come on stage and hand over the memento to Nitin Kamath, sir, as a token of gratitude.
Round of applause, please. Thank you so much. All right. So I think a lot of insights. I'm sure you're enjoying it, and probably we'll have it for a few more minutes. I hope that's okay. And of course, I'm going to open it up again for the audience questions. So thank you, first of all, both of you, for accommodating this. Sometimes we have to adjust as well. Thank you so much. So I was talking about the regulatory landscape, and where he made a mention of how things have changed. I think in the buy now pay later space and fintech, the government comes up with a lot of interesting things, and we saw Chinese app ban and a lot more things. So probably can you give us some light in terms of how you approach this, and probably how those challenges were overcome?
So our approach has always been be extra regulated from day one, right? So we were an NBFC, we got the right licenses 8 years ago, and I think agreeing to follow the letter and the spirit of the law has been our approach from day one. That has sometimes been painful. It's not easy being regulated, right? You need to have a lot of compliance teams, there's a lot of paperwork. So it was very, very painful in the first few years. But it has actually started to pay dividends in the last 1 to 2 years, where we've seen the RBI actually come in and clean up a lot of unregulated fintech companies who are trying to take shortcuts, whether it was in terms of products, processes, KYC, etc. And so if our approach has been be regulated, and that will always keep you in kind of good stead.
So probably quickly a perspective from your end. How regulation for a standard, a company like SBI is probably...
Yeah. See, not only I have to speak the compliances part or regulatory framework in India. See, since India is, if you compare in the world, it's called the youngest country since our independence. The whole society evolves through enlightenment. When the citizens are enlightened, they wish to have the compliances in place to mitigate the risk. See, earlier, even Nitin was talking about the business continuity. It's a part of a compliance. Suppose somewhere suddenly flood happens or earthquake happens. Now, what are the compliances? What are the business continuity plan you have in place? He was talking about a loan app. Similar thing also happens in banking industry, whether in State Bank of India or other bank. See, this has got multiple connotation if you look from the world point of view. The reason is, when we are discussing fintech and matter which is related to finance, so there are a lot of risks the country faces from time to time. Particularly for banking industry, the Basel Committee is one compliance which takes care of OCM, that is operational risk, credit risk and marketing risk. And again in that operational risk, there are so many things that one has to adopt. In the event of non-following of any of these regulatory compliances, the regulator, the Reserve Bank of India or SEBI or whoever it is, there are so many regulators in the country who will impose penalty. So that becomes a big news in the social media, and that brings disrepute to the institution. And ultimately, that such penalty, such reputation, such loss of image will affect the shareholders as well as the stakeholders. And also, it shakes the confidence of the customers or the citizens. So, there is a requirement to grow in a disciplined manner. So, the compliances are part and parcel of our life.
Wonderful. So do not let go of compliance. I think that's one of the key messages which is being brought in. I'll slightly move into a little different perspective, and Gaurav, you're focused as a company only into consumer finance, right? We're talking about companies which can do business finance, SME lending, etc. Any reason and how you have thought, and what is it that as a student community probably they should learn, that importance of being focused and how they could still make a win there?
One of the biggest learnings, business is never easy, and one of the biggest learnings that we have had is this word FOMO, fear of missing out, right? As a young company, you want to go out and do everything, and you don't have enough resources, you don't have bandwidth to do these things, and that causes a lot of mistakes, and that happened to us. And so one of the things that we've taken very seriously over the last 3 years is to be very focused on the customer segments. Do not worry what competition or other companies are doing. And that's the reason we know for us, this fear of missing out is no longer a problem. And so we stay very focused, whether it's a customer segment or the product. And that's a core tenet to actually how we run the business nowadays.
Very interesting. Stay focused is a very important domain, because today we're talking about business diversifying. But then today banks also have this need to diversify, right? Because they not only do the banking, they do the general insurance, they do the term insurances, life insurance, broking, right? So how is that perceived in a legacy organization such as SBI?
Yeah, definitely I will touch upon that, and also I will come back to that Fintech app, how you can. See, the whole world has witnessed universal banking. That is, the customers want all the products and services under one roof. So, State Bank of India, for example, because I am associated with that, so it has turned itself into a global bank, offering all kinds of bouquet of services under one roof. The banking is core banking. I mean, pure banking. Apart from that, it is also offering joint ventures. We have multiple joint ventures, like life insurance. State Bank of India Life Insurance is next to LIC. So like that, we have also entered into general insurance. We have entered into factoring services, credit cards. You name a segment or name a sector in the financial world, State Bank of India has entered, including that retirement solutions, pension fund, PE and VC, private equity and venture capital, and Macquarie, Australia. We have a joint venture with them to fund a large-scale infrastructure. So what I mean to say, suppose a person wants 100 rupee loan in State Bank of India, or Tata's State Bank of India is known for corporate lending. Single loan of 10,000 crore, 20,000 crore is also being given. What I mean to say, so under one roof, all sorts of products and services should be able to be offered by any bank. Of course, many banks are offering. I'm not telling other banks are not offering, but just I quoted only one bank. That's all. Even other banks are also converting themselves into universal bank. Having touched upon that, the SBI YONO or so many other banks YONO. So they have mobile banking app YONO. In that also you can do investment. SIP, you can withdraw cash. That is the technology revolution that has taken place under Fintech apps.
Very interesting perspective, right? As students, I think one very important lesson we need to learn, right? Everything which can be properly well planned today has a potential, right? You could stay focused and probably go ahead, or you can be a conglomerate and still go ahead and acquire business, and both of them work. But I think patience definitely is necessary. And probably one last question before I open it up for the students, right? If the kids, because you are also associated with learning, SBI learning initiatives, etc. So I'm sure you have interviewed, spoken to a lot of freshers who come out from college or after a year or two. If there was one or two skills, probably if they had learned better during the college lives, it would have been much easier for them to adapt to the market. What is it that you would say?
I think many of our students would agree with me. Financial literacy, that is the part of program in our initiative that is taken up by Reserve Bank of India. Basically, I strongly believe that from maybe 10th standard onwards or 11th standard onwards, every college, every student should be given knowledge about financial literacy. The reason is, once you are out of the college, whether you are in engineering or whether you are in arts or whether you are in science, commerce students, I am also a commerce student, they have better edge in understanding the finances over other. Savings is different from investment. In India, there is a saying that women folk are excellent, they are excellent savers, but they are not excellent company or any industry or in. The first and foremost you are ought to know, you are supposed to know is how you have to manage your own salary or your own resources. If that basic knowledge is imparted to you, disseminated to you in the college itself, so that will help to mold themselves where to invest, how much to invest, what to invest and what not to invest. All these things has to be made, because end of the day, money, finance, savings, investment does matter. So it should be made part and parcel of the curriculum.
Lovely. So financial awareness is, I think, what Mr. Srinivas has got to say. Gaurav, from your perspective, what is it that these kids should have into their kitty when they sit in for their campus placement meeting?
Yeah, I think, a lot of, obviously, financial management and all that is very critical, and I'm sure the college is doing a great job, also was doing a great job when I was studying it 20 years ago. But I think things like emotional quotient, emotional intelligence, soft skills, I think typically a lot of Indian institutes don't focus on this. And I think as 20-year-olds, 21-year-olds graduating from college, you may not realize that the importance of this, but as you reach 35, 40 and you've stared and seen a lot of ups and downs in business or in your jobs, you need to realize the skill set that you have to be able to manage these highs and these lows. And I think if there's a foundational training in some of these things, I think that goes a really long way in how do you manage and ultimately kind of control outcomes and stress, because it's going to come for everyone. And being able to give in those tools early on in life can only help you.
Lovely, lovely. So I think with that I would probably, reserve one last question towards the end and I open it to the audience. We could probably take about 4 questions maximum. And we have our volunteers there. If you could quickly...
Good afternoon. High up on the balcony.
Yeah, please go.
I don't mean to put ice on our exuberance for the fintech industry. I ask these questions only as an active investor in the fintech, publicly listed fintech companies. Given that we're in an environment of quantitative tightening, we are trying to suck liquidity out of the system, given that personal incomes have been on the low or have been on a downtrend across the world, and yet personal spending in the retail sector has been increasing. Is a retail credit bubble something we need to be worried about here in India? And a more general question, are there any other pitfalls that we have to look out for as fintech investors? Thank you.
I think you're right, you're definitely seeing a lot of a recessionary trend in most parts of the world right now. However, I do feel India is currently a little insulated from it. Fundamentals are still strong in terms of growth. I think credit demand is the highest it's ever been. And the reason why I'll say I'm a little more bullish that there's no real credit cycle around the corner is because we fundamentally took the right decisions during COVID and pre-COVID. And we, in some ways, paid the bill and didn't really print notes and create high inflation like a lot of the other economies did, right? So the pain that they are suffering now is because they took the easy path during COVID. We took a tough path during COVID, right? We didn't really have much stimulus to give to the country, which is why the next year or two, I think, will hopefully seem a little easier when compared to the rest of the world. Is there a credit cycle coming? I mean, there is a credit cycle every 4 years, whichever way we like it or not. So my best guess is, I'm most worried about a credit cycle because that's exactly what we do. But my best guess is I think the next 2 years should be fine, but around 2025 is when we should start seeing some turns towards high credit costs again.
Interesting. Somebody else in the audience, quickly. We have another.
Good afternoon, sir.
Yeah, please.
Before I move on to my question, I'd just like to thank the panel here for their insights. So now, relative to buy now.
Sorry, I can't see you. Where are you?
So relative to buy now, pay later, although the mechanism has been there for a lot of years, I believe it's come to the front line pretty soon, like relatively close up in time. Now, my question is, a lot of apps have started focusing on students. So if we take apps that are looking at college students, they initially ask us for our college email IDs, which we provide to them. My question here is, now in case there is a default, so let's say an app that's only providing loan or funding to students, in case there is a default, how do they essentially analyze these NPAs? And, I mean, are they NPAs firstly? Because they normally consolidate that there is a source of income for students, but there isn't in most cases at least. So how do these generally work?
Yeah, so firstly we don't lend to students, and I think lending to students is wrong. We lend to, the minute there's an income, then we actually start lending. But you're right, there are certain fintech companies who actually lend to students. My best guess as to how they do it and what happens with the NPS is they use a lot of data in terms of obviously social media, your phone, etc. So they figure out what could be the potential income of closest relatives, father, mother, etc. and those things, right? So the default fallback is if you default, trust me, there will be a collection mechanism that will come to your friends and family. And so my honest advice is, unless there is a burning and urgent need for money, as a college student when there is no income, please stay away from any form of credit, right? When you have income and you want to obviously kind of take loans, perfectly fine to kind of amortize your expenses. But when there is zero income, stay away from credit no matter how fancy the apps are and no matter what they promise you, because either they will charge you an arm and a leg for that loan, or they will come and break your arm and leg.
In fact, that is what the government was a little concerned about, and the last 6 months you have seen the way in which business has changed, right? It said that no by default credit and things like that, so that sort of a model has changed. Businesses are evolving, but it's very important as students and even in future, bear in mind, credit comes with a cost. Always bear in mind. And is it absolutely necessary for you? It could be an emergency situation and you have a stable income. Consider these factors, but otherwise, as student community, please be very, very cautious. And that's my sincere advice to all of you. One other question. Yes, please. I think we have to switch on the mic.
Yeah. Sir, I wanted to ask, how does, for example, the pilot program of CBDCs, like retail CBDCs by RBI and using all new technology like blockchain, affect the fintech industry? And a second question is, UPI cannot be free forever, so how do you think is a way forward for it?
Yeah, I think things like CBDC will only be positive for the fintech sector, because as and when more of these digital currencies or digital platforms eventually evolve, we end up moving more from a cash society to a cashless society, which generates more data, and the companies like us can actually generate and use that data to be able to provide credit or insurance or anything else, right? So CBDC is just another step in that direction. In terms of UPI, I don't think UPI is free today, right? There are banks, etc., who are paying or who are charging. The government is actually subsidizing it at this point, so it's not free. Will it remain free forever, at least in the sense where the consumer is not paying for it? I think that will always remain, at least for the next 3 to 5 years. Because what we are seeing today is, if you take the likes of a Paytm, etc., well, UPI is free. They tend to make money from other services like lending, insurance, mutual funds, etc., right? So UPI is considered a good customer acquisition tool to give for free, and it's in some ways the new cashback that used to exist 5 years ago. But given what UPI has done, not just to the fintech system but to the country as large, I think there's always going to be a push for it to be free for as long as possible.
Yes, sir.
And just to also give you another perspective, right? You look into an app like a PhonePe or a Paytm, as he rightly said. The moment you do a transfer, right, you are starting to use that more and more, and then he gives an advertisement, hey, take an insurance, why don't you open a, book a movie ticket or, whatnot, and you are getting more and more glued to it. One last question.
Hello.
Yes, please, yeah.
Yes.
Sorry, I see a person in the, here. In case you've already got the mic, I will permit that question alone, yeah? The last 2 questions. Yes, sir, please.
Hi, sir. So you said that company like yours would be interested in taking interns. So in this semester, we were actually looking for companies to
What a better way to give you
I'll give you my email ID, you can reach out to me. It's gaurav@axio.co.in. So feel free to reach out to me. I'm an alum of this amazing institute. So anyone at Christ College, 2nd year, 3rd year BCom, is more than welcome to intern at our company.
Lovely, lovely. Really good round of applause for him. Yes, and one last question. I think it was in the balcony. I'm sorry. Yeah. Yes, please.
Just make sure you have your attendance at 85%.
Because we're planning to integrate the Christ University's jokes. But yes, please. Mic not working. Which one? Okay, please go ahead, sir.
Can't hear you, sorry. If I got the question right, is how do we bring MasterCard and Visa onto lower MDR? Sorry, I didn't get the full question.
So right now RuPay is on the UPI platform, and MasterCard and Visa are hesitant because their primary source of income is from there.
Yeah.
So how do we get it? Because right now debit cards they have accepted, but not on credit card.
You know, I think firstly the whole RuPay thing obviously is because it's been promoted a lot by the government, which I think has been a great initiative. I think MasterCard and Visa, honestly, if they don't get onto the platform, they will end up losing business, right? So while the government may try and nudge them and push them, ultimately market forces will kind of take them there. And if they don't do it, they will see slowly but surely over the next 3 to 5 years that customers will kind of generally start to use them less because they are not omnipresent. Because the whole point of a credit card or an instrument like that is to be able to use interoperability. And if UPI does not get facilitated on these platforms, customers slowly will start pulling away. So market will force them to go there whether they like it or not.
Interesting. So I think that brings us to the end of our conversation. Of course, I just have one last final inputs from them to share. I'll start with Sir. Sir, if you could quickly give us your final concluding remarks in terms of A, the Fintech revolution, and B, as kids, how do they get it?
Fintech revolution, there is absolutely no way looking back, only looking forward. If you look at the UPI transaction, digital transaction, the country has witnessed. I do not know how many of our students have gone through the data. 2,300 crore, I repeat, 2,300 crore transactions involving amount of 38 lakh 12,000 crore. 38 lakh 12,000 crore. Total 40% of global digital transaction has taken place in the country. That is the enormous load that has taken place or that is taking place in digital format. If we have to touch the last mile or last person in the country has got 6,30,000 villages, 140 crore population, and the brick and mortar branches definitely cannot reach them unless until you bring the FI that is started with PMJDY. Earlier also it was there, but this government started PMJDY. Financial inclusion, that's nothing but financial inclusion. Financial inclusion is nothing but including the excluded for the purpose of inclusive economic growth. Unless until we join hands with the policymakers and rightfully complying with the regulatory frameworks which are announced from time to time, and unless until we take everyone along with us, the country will not be peaceful, and everybody should be made part of the growth story. Then only everyone will prosperous and everyone will be happy. And I strongly believe, end of the day, if not today, another 10, 15, 20 years, we should follow the happiness quotient that is enshrined or that is allowed by the country, the smallest country in the world, Bhutan. So the economic prosperity, whether it is 5 trillion economy, whether it is 3 trillion economy or 40 trillion economy, end of the day, with the prosperity or with the wealth that you have acquired, you should be happy. That is possible only when the banking industry and the finance or NBFC or whatever that the Gaurav is doing, it's all really commendable. and unless until all come together and grow together, the country will then only will become most second or third economic superpower in the world. Thank you.
Lovely, thank you, sir.
Yeah, I think, this is going to be the golden era for fintech in India. I think we are leaps and bounds ahead of all the developed countries in terms of digital infrastructure. And the next 5 to 10 years, maybe selfishly so I'm speaking, that fintech is really going to overtake a lot of traditional banking. And so I think that's a great area of opportunity as you guys think about your careers. In terms of, I don't know, what advice I can give you guys is, enjoy life. You're only in second year, third year of college. Don't take your lives too seriously. Have a good time. You have enough time after college to figure out jobs and entrepreneurship, etc. I met my wife when I was in this college. She is still my wife. And so enjoy and make sure life ahead is going to be tough. So enjoy. This is the best time. Don't forget having fun.
Lovely, lovely piece of advice, and with that I come to the conclusion. Couple of thoughts from my end, probably summarizing and giving an overall perspective. I think it's rightly said that you need to have a passion. Your passion will drive most of the things. We are in a very, very interesting time in India, right? Starting from the technology stack, from the government, from the regulators, from the inclusion, we're seeing a lot of positivity. And as it is always said, if there was a better time to be in India, it is now. If there was a better time to invest in India, it is now, right? So put on your thinking caps while you're having your fun, while you're having a lot of, enriching experiences, enjoy your college life. Make sure that your fundamentals, what you study, are very intact, clear, and very important. See how much more practical insights you can gain from the outside markets. It could be through internships, through bridge courses, while you're having your share of fun. Thank you so much for Christ University, the Department of Commerce, for giving us this opportunity. It's indeed a privilege, and it's wonderful meeting and interacting with all of you. Thank you so much. Over to Dr.